Welcome back. This is the Mortgage Sensei. Our next video is going to be in regards to the USDA loan. Okay. So let's get right into it. First things first. What is a USDA loan? The USDA loan is through the federal government. United States Department of Agriculture. It is designed for rural properties. Rural properties. Okay. When you think rural, think the country, right? That's the best way I can explain it. It's not suburban. It's not urban, right? It's rural. It's out there. It's in the country. Now, the next question is why? Okay. Why would you want to go with a rural USDA loan? The first reason is you live in a rural area, right? That's the number one reason. You live in a rural area. A second reason, and I tend to do this a lot, is that you don't qualify for the amount of house that's in the city. So in an area that I live in, which is in Atlanta, Georgia, home prices, inner city Atlanta, 400, 500,000, probably more depending on the area in which you're looking at. So, I have a lot of clients that say, hey, these homes are too expensive. I only qualify for maybe $100,000, $150,000, $200,000 house, right? Well, then they get out to the rural area, and then they run into the next problem, right? Next problem is I don't have a lot of money to purchase this home, and in those cases, USDA loan makes sense. Okay, and we're going to get into a little bit more in detail that way you see what I mean. So, how? Okay, how do you go about obtaining a USDA loan? First things first, you got to be eligible. Okay. Now, the eligibility for USDA is based off of two important factors. First, there is a property restriction, right? Meaning that the home, USDA is going to confirm that the home is in an actual rural area. You can get with a mortgage loan professional like myself or contact the lender or the bank. You can always go direct to the USDA. Good luck with that. But you'll contact us and we'll let you know, hey, this is the scope, or you'll say, hey, this is the address in which I want to purchase. And, we'll contact the USDA, through their website, look it up and say yay or nay, right? If it's a yes, then you go to the next area. So let's put rural here, which is going to be income, right? Now, income should be done during the pre-approval stage. But income is, are you under the USDA income limit, right? They dictate how much money you make annually before they say, yes, you can get this loan. Now, a key point here is that it is based off of household income. I can't stress this enough. Household income, right? Meaning that, okay, you may be the only one on the loan, right? And you have a spouse. You have a 16-year-old, child that's working, right? Or you have a disabled person or elderly person, parents, whatever, that's living with you, receiving Social Security, but none of these people are going on the loan with you. It matters, right? It matters. The USDA is going to ask, okay, who's all living in the house with you on this property? And, you got to be honest, because if you're not, you're going to run into mortgage fraud because you're lying on your application. You're lying to the federal government, and you're going to tell them, hey, okay, I'm living here. My uncle's living with me, my sister, my wife, my kids, however many people here. Your prerogative is your prerogative, right? But you have to be honest and let them know this is how much income we're all bringing in, right? This person's disabled. this person's under the age of 18. So they want to know those two very important things. How many people living in the house? And of those people that's living in the house, how many people are disabled? And how many people are under the age of 18? Based off of this collected data, is going to give, it's going to spit out, okay, this is the most amount of money your family, everyone living in the house, can make annually. And as long as the total income is under there, you're eligible based off of income. Okay. Now, let's go to credit. Credit. Okay. Now, when we talk about credit, when it comes to a USDA loan, the credit score requirement is a 620, right? 620. Sweet spots, I would say a 680, to be honest, because at a 680, for those that really know their guidelines, it'll open up some DTI restrictions, but 680. Now, when it comes to, you know, major derogatory, right? Major derogatory. Now, with all the loans, for the most part, you don't want to have any late payments, charge off collections within the last 2 years. That's just a given rule, right? But when it comes to the USDA loan, when we're talking about bankruptcies, foreclosures, you know, the major D-rocks, it's 3 years, right? 3 years, meaning that before you start the application, before you go under contract, okay, you start the application, we want a minimum 3 years to have passed, calendar months has passed before you start that application and go through the USDA running gusts and so on and so forth, right? Now, again, some lenders may have an overlay and say, you know what, we're not cool with 3 years. We want 4, 7, however many years that they want, right? But that's the USDA guidelines. Again, brokers are better, and normally we don't have all those extra overlays. Okay. Next, let's talk about debt to income ratio. All right. Now, when we talk about debt to income ratio, it is 29:41. Okay. 29:41. Now, if you did not watch my crash course on debt to income ratio, please go back, pause the video, go back, watch that one, then come back and finish this one out. But 29% housing ratio, 41% total debt to income ratio, USDA loan. So in this scenario, what they're saying is that we're not going to let you use as much as your income to qualify because our terms are favorable and our requirements for you to get into the home is favorable, right? We want to make sure that you're not in over your head. That's basically what they're saying. Next thing, let's talk about funds. Okay. Again, we're sticking with down payment and down payment alone. No money down. No money down with the USDA loan. That's one of the main reasons why they require such a strict debt to income ratio, because the federal government is allowing, no money down. Next thing, let's talk about property type. Property type, we have the standards. We have single family residence. We have condos. We have manufactured homes. We have townhouses. We have modular homes, right? It has to be for your primary residence. Primary. Matter of fact, any government loan, FHA, VA, USDA, all primary residences. No second homes, no investment properties, nothing of the such. Okay. Now, from here, again, this is just a crash course, right? We'll be getting more in depth with each program as we go along. I can spend a lot of time just talking about credit. I can spend a lot of time just talking about debt to income ratio and so on and so forth, right? But for those that want to go ahead and get started, please check the description below. You'll be able to see that there is a link for you to submit an inquiry. This inquiry is just, you're giving me some basic information. That way I have a understanding before we get into to contact with you on what you're looking for, where you're at, get you the right information, save yourself a whole lot of time. Check out my website. We have a link to my book, How to Buy a Home with a Loan. We also have a link in the bottom towards my Facebook page and my Facebook group. Please join that, join the community so we can get everyone educated. But the biggest thing is home ownership, right? Home ownership. When we compare home ownership to renting, there is no comparison. Home ownership versus renting, there is no comparison, right? Any person that tells you differently, they don't know what they're talking about. Get you a home, start building that generational wealth, start increasing your net worth, start paying yourself, right? Paying yourself. We'll talk about that more in detail as well on our next, or one of our next videos. Matter of fact, let me get something special here, right? I was going to talk about non-QM, but we're not going to get crazy with that. Our next video we're going to talk about is PITI, right? We're going to get right into PITI, right? Mortgage Sensei here. It's been a pleasure. I wish you all the best success out there. See you on the other side of home ownership. Catch you on the next video.